Inflation numbers are down. Inflation has peaked. What does this mean for mortgage interest rates? In today's video, I'm going to do something really neat. I'm going to record this on Tuesday, November 8th. It's 3:36 on Tuesday, November 8th. And I'm going to release this on November 10th after the CPI, aka inflation numbers, are out. We'll see how close I got, right? Because I'm recording this with some assumptions and some guesstimates on inflation and what that's going to mean for mortgage interest rates. Stay tuned. All right, Matt the Mortgage Guy, residential mortgage broker. I help people across the country buy and refinance real estate, 1 to 4 unit stuff. If you're interested in getting yourself pre-approved, talking to me and my team, go to greatmortgagebroker.com. That's all. I was going to do / something. What's going on with me? I'm losing my mind. I'm trying to think into the future, right? What's going to happen with the inflation number? It's going to be released 8:30 a.m. Eastern on November 10th. And then I'm going to release this video after that. I'm either going to look like a complete idiot or a genius. I've already shown you with screenshot proof that it's Tuesday, November 8th as I'm recording this video, right? So that's me. That's today. I am recording this with my guesstimates on what's going to happen with the inflation number. I've said this in past videos, but I wanted to say it here. I wanted to get it out publicly and then release, for better or for worse, on Thursday when we actually get this inflation number, because of what I think is going to happen. Even if inflation month over month ticks up, it's going to show a year over year decline. So it's going to look like inflation is improving, which I think it truly is, right? I think used car prices are down, gasoline prices are down. You're out of your mind if you don't think that all of the housing data that's packed into inflation isn't down, right? Housing isn't increasing 15% year on year. We know that, right? In real life, in today's numbers, it's flat, right? So any signs of inflation cooling down, especially with that core inflation number, is going to be a bright light for the market. That is going to be a positive for mortgage interest rates, meaning interest rates come down. So like any future Fed action is going to hinge a lot on this November 10th number. Depending on how high or low this inflation number comes in, the Fed is going to talk about their future plans for future rate hikes, a quote unquote Fed pivot. They might even mention something today about like inflation looks like it's peaked because it's on its way down, right? They're going to talk for sure about what they're going to do with future rate hikes into 2023. This is going to have an effect on all markets. I want to specifically talk about how it's going to affect the mortgage markets, mortgage rate. The U.S. Bureau of Labor Statistics is releasing this CPI number. It's expected to fall by like a little bit, right? September's number was 8.2% year over year. And depending on who you follow or who you're looking at, like they expect it to be 8.0, some even 8.1, right? Just falling a smidge. If you look at the last 3 months, like month to month change, unadjusted index numbers, like what they use to calculate inflation, like inflation could come in significantly lower than expected. And again, this is going to be a positive for mortgage interest rates. Mortgage rates will come down, no doubt. The Fed will react to it. They'll speak. They'll talk about future Fed meetings. They'll talk about inflation, being under control, have been peaked, on its way down. All those things are going to have a big impact on mortgage interest rates. Depending on the impact is where they land, right? So I'm going to go over 3 scenarios. Within expectations, either below expectations or above expectations, right? And so if inflation comes in higher, I'll tell you how that's going to affect it. If they come in lower, how that's going to affect it. And then of course, if they come in like right in line with expectations, and if the monthly increase of inflation comes in at like 0.5%, which annualized would be 6%, it's still well above like their 2% target. They talk about a 2% target. But it's like, that's about what we're expecting, right? Lower than the past 2 months where it's 0.6%. But still like what we expect, right? And really like the market mood is going to come into play, right? On how the market's feeling and how they react to this. But this would be, of all the scenarios, the one that had the least amount of effect on it, right? Where like it's just the status quo. The Fed will continue doing what it's doing. Not going to be a big market mover, either stock market or mortgage, either of the two, right? If it comes in below expectations, which like a monthly increase of 0.4, which annualizes to 4.8% year over year, means we're headed down, right? A month over month of 0.3, 3.6 when annualized over a year would be way down, and the markets would be cheerful, right? Like they would no doubt take this as a clear sign inflation's coming down. I would be very surprised if Jerome Powell and the Fed didn't talk about like, only doing a quarter in December, no rate hikes for the first quarter of 2023. And it would really have a positive impact on mortgage interest rates. Sure, it's only 1 month, but like that would have Santa rally effect. Okay. On the other hand, if it comes in above expectation, a repeat of 0.6% month over month, or if it came in at 0.7%, which mean like an 8.4 annualized, would be like a major blow to markets, right? Like it would no doubt cause the Fed to say like 75 basis points in December, no doubt. 2023 meetings, we're going to have to continue to hike up that terminal rate above 5%, and it would have a negative impact on interest rates. For anybody rooting for 8, 9, 10% interest rates, this would be what you'd have to see to have interest rates continue to go higher. So here on record, again, proof that it's November 8th because the clock's moving. I couldn't have taken a screenshot. I'm going to call that it's going to come in below expectations. And remember 0.4 month over month, when you look at it year over year, is going to show a downtrend. So a 0.4 number month over month is going to be below expectations. It's going to be a positive for mortgage interest rates. Mortgage rates are going to start to come down. If you follow Barry Habib, he's got a great kind of roadmap, thought process around what could be coming in 2023. And not only does inflation decreasing cause mortgage rates to decrease, but the 10-year treasury would come down, and we might be in a place Q2 of 2023 with 5% interest rates, right? It's not going to happen overnight. And I'm not saying that we're going to get this report and then we're going to wake up Friday morning and rates are going to be at 5.5. But if it does come in below expectations, like I expect, shelter inflation is down. I'm sure of that. Used cars down, gas down. I think that inflation is coming down. I think this report is going to show it. Although it lags, we're going to start seeing it, especially considering the fourth quarter of 2021 had really high readings, October, November, December. So compared to those really high readings, October, November, December, first report of October coming out on November 10th is going to start showing a slowdown in inflation. That's going to cause mortgage interest rates to come down. Like I always say, we going to see, right? And this video is going to go out no matter if I'm right, wrong, or somewhere in between. Again, if you want to connect me and my team, go to greatmortgagebroker.com, fill out the form, let us know where you're at, how we can help. If you want to connect with a great agent in your market, go to homeandmoney.com/Matt. Thanks for watching. If nothing else, hope you're entertained. Bye-bye.